Welcome back to another episode of Tea Time, the series where we explore what's brewing in Caribbean markets. I'm Harold, Senior Investment Officer at RF Bank and Trust, and I'm here to help you make sense of the investment climate moving into the first quarter. For the first time since the pandemic, almost everything worked in markets last year. It just didn't feel that way while we were living through it. Tariff headlines, political drama, constant market swings, it was a lot. If you questioned your discipline at any point, you weren't alone. At RF, we follow global markets closely because what happens internationally sets the stage for what happens here in the Caribbean. And in 2025, the global picture ultimately rewarded patience. So what actually happened? 2025 turned out to be an everything rally. Stocks, bonds, and other major asset classes all ended the year higher, but the path getting there was anything but smooth. Early in the year, tariff threats triggered a sharp sell-off that shook confidence. By April, portfolios looked vulnerable, under pressure. What changed wasn't headlines, but the fundamentals. Corporate earnings held up, economic activity remained resilient, and markets recovered and pushed higher into year-end. One of the most important drivers of US equity performance was artificial intelligence. Continued investment in AI and related technology supported earnings growth and helped keep US markets on track despite the volatility. At the same time, leadership broadened globally. Emerging markets ended up being the strongest performing equity region of the year. As tariff fears eased and worst-case scenarios failed to materialize, investors became more comfortable looking beyond the US for return. That shift, combined with a weaker US dollar, helped lift international and emerging market equity returns. We saw that global backdrop reflected in the RF International Equity Subfund, which returned 7.7% in 2025. We see a similar dynamic across the Caribbean, in places like the Cayman Islands and Barbados, where economies are heavily import dependent. When most goods are sourced from the US, movements in the dollar, changes in freight costs, or trade-related price increases tend to pass straight through to local prices and business conditions. Import dependence, however, doesn't mean that local firms aren't able to generate strong returns. A good example is Bank of the Bahamas. The bank surpassed a milestone of more than $1 billion in total assets. At the same time, targeted lending initiatives, along with improved deployment of excess liquidity, helped drive meaningful growth in net interest income. The stock was up over 40% in 2025, and it's a reminder that local progress still matters, even when global headlines dominate. Take our RF Targeted Equity Fund, for instance, which prospers hand in hand with local enterprise. It saw a return of 7.9% in 2025, more than double the return of BizX, our local stock market. By monitoring the local market, RF investment managers like myself help clients make the most of what's right at home. Now let's talk about bonds, because in 2025, they earned their place back in portfolios. Global bonds delivered solid returns, and investment-grade credit performed even better. That wasn't just stability, it was real contribution. Attractive yields to start the year, rate cuts in the second half of the year, and a weaker US dollar all helped support bond performance. While longer-term government yields remained elevated due to ongoing fiscal concerns, bonds did their job. They added balance and took some of the edge off the ride. So, what did 2025 teach us? In the end, the investors who did the best weren't the ones who jumped around trying to predict the end of the year. They were the ones who stayed disciplined throughout. As we head into 2026, those same principles apply. Stay calm, stay diversified, and stay invested. Thanks for watching. See you next time.